the big banks, what we call universal banks in our industry, find it a massively challenging segment. And there's an underlying structural reason for that. They have two major revenue centers. One is a mass market one, which is predominantly consumers. So in the UK, 30 million households. It is also the 5 million micro businesses. And the reason for that is because those micro businesses are so simple in their finance needs and circumstances, you can serve them on the same operating model and platform. So for example, one of the big banks was offboarding all their SME customers with more than 2 directors. And reading between the lines, it's because their consumer current account supports 2 payees, spouse and a spouse. Yeah. So their operating model for the SME segment is designed for consumers fundamentally. But the micro businesses are so consumer-like, they get a pretty good service from the big banks because they're so much like consumers. The dominant form of finance for micro businesses is a personal credit card. 1/3 of them use a personal credit card to fund their business. If you think about it, it makes perfect sense. You're a tiny newsagent. You're buying a few £1,000s of stock. You're going to a cash and carry. Why would you do a loan application at the bank using a personal credit card? Yeah. So yeah, micro business is actually very well served by big banks as its consumer. Right? Despite the kind of customer growth of consumer fintech neobanks, the reality is the vast majority of the revenue pool of consumer is still with the big banks, right? So the big banks are still winning if you're looking at the metrics that matter.